Hey, what's up, everybody? It is Jeff Javarthan, Jeff the Mortgage Pro. Thanks so much for watching today. I thought I'd do a quick analysis here of a VA purchase just to show you what we do on every single transaction to show the client some different options about what that they can do when they're purchasing a home because there's always different interest rates out there, and that's one of the things that I don't think that anybody really understands, that's not in the business, is that when you have an interest rate, there's not just one interest rate. There's a whole range of interest rates. There could be 20 or 30 interest rates available for every single product that you're trying to finance in real estate. So what I always try to do is give people some options, give them a range of payments and closing cost structures so that you can choose what's best for you that fits into your overall financial plan and your overall financial picture. So this is a VA purchase case study, as you can see on the screen here. I picked a property in Fairfield, California, which is near Travis Air Force Base, which is a big base here in California. And there's no particular address on this property, just a hypothetical. I looked at the home values in the area, and they're approximately 500,000. So I thought I'd use that as a purchase price. Okay. So if we look at our analysis here, we have a VA purchase of 500,000. Our loan amount in this case is going to be $510,750. And the reason why it's more than the actual purchase price is because of the funding fee. And then let's say that in this particular scenario, the veteran that's buying the home cannot waive the funding fee. So it's 2.15% of the purchase price if we're putting less than 5% down. In this case, we're not putting any money down. So we're going to finance it into the loan amount itself. And our base interest rate is 6.125%, let's say. And this is hypothetical. This isn't actual pricing, but you can see the difference here in just a second. The monthly payment on that with principal, interest, taxes, and insurance is $36.74 per month. And the cash to close that we would need, I actually pulled in some estimates of closing costs for this particular area near the Travis Air Force Base in California. So roughly cash to close is $9,609. And this has to do with also including an escrow account for taxes and insurance as well. And I estimated 2 months worth of insurance plus a full year's premium, because you need to do that when you close. And then you also, in this instance, I just use 6 months for reserve account for taxes in this instance. And that's what we use in California often. Okay. The second scenario is the exact same purchase price, $500,000. But let's say we wanted to buy the interest rate down to a 5.625%. And in this case, it's going to cost 1.5 points. So that 1.5 points, it can come from the borrower, it can come from the lender. It's hard to do it when you're going for a lower interest rate. It's not really able to be paid by the lender in that instance, but you can also have it paid by the seller. So if you could get a seller credit in your market, then this could definitely help you out to help lower your interest rate below market interest rate. And you can see that our loan amount again is $510,750, 5.625% for the interest rate, and our monthly payment $35.11, and the cash to close, including the points, $17,271.25, and that saves us $163 per month. Okay, so here's a quick way that we can figure out whether or not this is a really good option for us. We can figure out how long it's going to take us to break even. So at 1.5 points, that's about $7,500. And if we divide that by 163, we actually get 46, which means that's 46 months for us to break even. Now, if you think about that for a second, 46 months is a long time. How many years is that? That's almost 4 years. So the chances, I believe, of interest rates going down at least 0.5% for us to do a VA IRRRL refinance down the road are probably pretty good in the next couple of years, in order for us to get down to a lower interest rate. So if you paid that much in points in the beginning to buy down your interest rate, you're probably overpaying and you're going to be wasting some money. In other words, I think that you're going to be able to refinance before the balance of that points are paid off. So in this instance, I probably wouldn't go with that option to buy down the interest rate further to 5.625% just because I wanted a lower payment right now. Okay. You're going to be throwing your money away because you're going to be able to do a VA IRRRL before that time frame is up. And then the last scenario, another hypothetical example, let's say we want to get the interest rate down 1 full percent down to 5.125%. In this case, it's a 3 points cost to get to that particular interest rate. Again, $510,750 for a loan amount, 5.125% for the interest rate, monthly payment $3,351.80. and that gives us a cash to close of 24,932. And again, you can get seller credit to pay for that. In this instance, we're just using extra cash that we may have laying around to buy the interest rate down if we wanted to do that. And then the monthly savings in this example is $322. So again, if we take 3 points, which in this instance is $15,000 on a $500,000 loan, then divide that by 322, we also get 36 months, 46 months in order to break even on this particular thing. So that means almost 4 years it will take us to recoup the amount of points that we've paid into this loan. And so again, I don't think that I would choose this option here because I think that it's going to be a lower interest rate before then, and you can easily save some money with a VA Earl refinance, most likely before you can actually before this actually breaks even. Okay. So this is analysis that I do with all clients on all different types of loans. I give you a range of interest rates so you can see exactly where it is. This one happens to be a VA purchase example. I do love working with veterans. It's probably my favorite loan to do. So hopefully you enjoyed this analysis. If you have any questions at all, please feel free to reach out to me. I'll leave my Calendly link below in the description, and I'll also make a comment about my Calendly link. Feel free to schedule an appointment with me. Love to chat with you for 15 or 20 minutes about your scenario and see how I can help. I'm licensed in almost 25 states now, so I can help you in most places that you're at in this country when you're trying to buy a house. Okay. Thanks so much. Have a great day, and we'll look forward to chatting with you on the next show.